Good afternoon this Tuesday, June 23rd. While the wheat trade crumbling, as it should not be a surprise, last week in the videos and in the newsletter, we said this week, June 22nd, into the end of the month, is one of the worst seasonals for the wheat market that can have the tendency to do this. Now, it's amazing how the wheat market pulls it off. Of course, it's the seasonality of wheat. The harvest is under full pressure down in Kansas. Farmers haul to town. They don't have grain bins for the most part. And we just get this action. It's the feast before the famine, so to speak. Now, what's happening over in Europe is a totally different animal. And the market is ignoring it for now, but it won't be ignored when we see later on exports out of the European community are curtailed and imports of corn occur. Now, what am I talking about? Well, we hinted on this last week and we'll show it again to you today. Europe has been dry for well over 30 days now. And France, this temperature pattern, this is 99 to 103 degrees. France is sweltering in this heat. The wheat is at the end of the flowering stage, going into the heading stage. There's going to be crop losses. And as we look towards Germany and Poland, they're experiencing the same dryness. The heat wasn't there today. It was over the weekend. It retrograded, and now the heat's coming back again. Here is Friday. As you can see, this heat moves into Germany. We're catching it here in the Baltic states as well. And then here we are, Germany sweltering in it on Sunday, and along with Poland, catching a lot of 100 plus degree temperatures, no moisture for 30 days. Now they're farther behind. They are in the flowering stage. So this will affect production. Yet our wheat trade doesn't acknowledge it. Now, as far as a break, there is a break next week in the heat down into the 80s and 90s. But I went out in the 14-day forecast out to Monday, July 6th. Moisture remains absent for France. There's a little bit that they've tried to imply shows up in northern Germany. Whether that gets there or not, we're looking at half an inch up here. Poland, for the most part, no rain except for the southern areas. Will probably catch up to an inch. But Poland and Germany in this whole range, they're struggling with their flowering into the heading stage. So ultimately, it is going to be less wheat, and it's affecting the corn crop right now because they are, at this moment, they're doing their pollination. Here's a Matif November corn. Look at how blindsided they got. And today was a softer session after yesterday's 1, 2, 3, 4, 5 days up. It hints up 5 days ago, then it explodes. Pretty comical how they play this out. And now we retreated a little bit today. We'll see what tomorrow brings. But we put on the equivalency of 60 cents to corn, 60 cents a bushel. While today, what do? We stumble. We fall below this multi-2-year support zone going back through the fall of 2024. We closed just under it today. Now, we did not make a new contract low yet, so that gives tomorrow an opportunity to try to get a reprieve. But if it doesn't, obviously with the breakdown, you've got a 1, 2, 3, 4, a fifth wave down. If we measure from here to here, it's 26 cents. Take 26 cents off of 449.5, you get 423.5 is the possible target of a breakdown here if she just slides lower into the June 30th acreage report. And of course, now we're getting the hint as more estimates will slowly start to come into play. Many are starting to think that the corn acreage will stay where the 95.5 million acre number was. That's why corn isn't doing very well in here. If you're getting value from this video and want more, just check out our daily newsletter. Each morning, we send a market summary to start your day, plus deep dive analysis, trade alerts, breaking news, and videos just like this. Whether you're a farmer, trader, or just tracking the markets, it's a great way to stay ahead. Start a free trial by scanning the QR code on screen or clicking the link in the description. Call us at 701-222-0221 or visit heartlandinvest.com. Whereas we move over to the wheat trade, Kansas, this is the July contract, heading back to the lows made at the opening of the month. We do have our 60-day cycle coming up at the opening days of July. This is a continuation. This is the September contract came on early in the week. That's how it tagged the 38% retracement on Kansas City wheat. The July contract, in fact, didn't get there. This was the July contract here. And now we've pulled back to the 100-day moving average on the September contract. Maybe we might get a bounce in here tomorrow. If not, it'll probably erode more back to the 585 to 590 range, which is a 200-day moving average where it would set up for what we think will be an early harvest low, likely here opening days of July, bottoming ahead of time because the harvest should be wrapping up much quicker than normal. Minneapolis wheat taking it on the chin. Your September contract coming on 3 days ago. Now it's down to our major 224-day moving average. Again, maybe something brings us some support in here. Tomorrow, the July Minneapolis wheat contract, which that was the September contract on continuation, all the way back to the January lows. We cleaned out all our old crop sales up here and went half sold on all new crop wheat in that area. And here we are, wiping it out. The feast before the famine, so to speak. And we have Europe going backwards. We have likely Australia is going to struggle in the coming months with that super El Nino, but yet the wheat, we crush it for now. Early seasonal lows, maybe we'll get something lighting up here in August. Soybeans holding together as they are waiting for China. More buying should probably occur. Found legs at the 200-day moving average. More importantly, on a daily close, we were always holding the 50% retracement of the January low to the May highs. So all we need to actually hear is China is lowering those tariffs. That'll give support that the private companies from China will be buying. Otherwise, what we're probably seeing is they're buying the board here, locking down this breakdown. And then, of course, we'll see what the June 30th data brings. If there is no increase in acreage, like many was fearing back in this window, well, then beans could probably do more of an assault. First, initially, this blue line. This is the 35-day moving average. As you can see right now, parked up here in the 1170 range, and that'll lose about a penny a day. So any strength now, about a 30-cent pop, should likely run into resistance. So you can just see it right across here, 1173, 1170. So let's just say 1170 to 1175 initial resistance it'll run into, and then they'll do the game, try to sell it off again before possibly turning it higher, maybe on more aggressive Chinese buying, or maybe a friendly report from the USDA on stocks or acreage. Don't know. All I can see is the bean trade is holding up pretty good. And as far as a spot contract, a wave 2 correction is what we are in and getting ready for a potential another lift higher. Maybe it's August weather. Don't know. But soybean meal certainly performing well after a 5-wave advance into that May high of ABC break to 300. Look at this support. Even yesterday closed at its lowest price, yet holding 300 and turning up today. Possible C wave low in here to get another leg climbing, especially if the Chinese start buying beans. That's going to support the meal, as soybean oil on its own has the ability to move higher to meet the standards for RVO. Hit the 100-day moving average last Friday before the EPA gave us the word that we were woefully behind. Likely a 1-2-day correction here in bean oil should turn back higher again. I think there's a buy in this December bean oil. Now, let's go to cattle. August cattle, again, stalling out. The excitement of Monday morning, bam, hit the 250 range, was repelled into today's action. Of course, big support is down here at 242 to 243, but they stalled her out. Even with the 5-area cash last week, just under 260, June cattle has 5 days to go, and it's got to put another $5 on. But just like every prior contract, they're leading this with a bull nose in their nose, and they're going to get pulled higher because even the April contract, this is April. Look what happened the last 6 days of April. Jammed it higher right into expiration. So I don't see how we might not see that as well into June 30th on that June contract, pulling August probably through 250. Now, August feeder cattle, talked about that 786, 370, was able to park right at it yesterday on the close. Feeder index climbing 373, doesn't matter. They hit her down today. But seasonals are still positive from the opening of June into the opening of July. Nothing looks scary here other than a 786 pullback. If we put it on the continuation chart, it's the same 370 because August made this high, August made this low. So it's the same number stall here. Now, if we can push higher, yes, we can take a run at that 380 range for wave 2. And for that matter, in a topping phase, we can challenge highs. Here's your feeder cattle weekly chart. You can just see this topping phase. We're up into some pretty major resistance, 380 range, feeder cattle trading in the 373, hoping to ever get back up to 380 again. This is an aged bull market. We're not racing new highs. Look at here. This is 2023, new highs, new highs, new highs. We keep racing highs. But now in 2026, we can't race new highs. It seems we've lost the gas. We are running out of gas and slowly rolling this over. It's not one of those old obtuse tops and drops. No, we're just kind of doing a rollover top possibly because the numbers are tight. 75 years, tightest cattle numbers. We know it. It's the oldest story in the book. But then there's the demand side. Pasture is getting better. Calf runs are going to stop being so aggressive now, getting them off of drought pastures. Whatever it is, I think we just got to be careful. These feeders can rally into the 1st of July, but once we get close to 380, start selling calls against it. Maybe they make a run at the 400 mark. But for now, I just know we're at the aged part of this trade. This is Eugene Grainer with Heartland Investor Capital Management. I hope you find this information useful.